My name is Tommy Humphreys. I am a 29-year-old editor of a publication called ceo.ca, which covers the juniors, and I joined Lawrence Rolston's Resource Opportunities newsletter last June or July. And so I'm going to give a quick speech. I think most of the people in the room have more experience in the mining space than I do, so take everything I say with a grain of salt, and I hope to get over with quick and let these brilliant CEOs get on with presentations. So, all right, quickly, everybody's heard the zombie story probably 100 times from John Kaiser. The crux of my publication is interviewing people. We've interviewed over 40 CEOs and analysts in 2015 alone. I had a story published with John Kaiser the other day which really succinctly nailed what's wrong with the junior sector, and there are over 600 companies on the TSX and TSXV with negative working capital. Everybody knows that. These are the zombies. There are other things like the brokerage business model. Big banks have obviously gobbled up all the venture players in the brokerage space, and now you're seeing compliance departments doing trying to cover their butts and telling brokers not to be in these juniors, and so you've got a system that's collapsing on itself. And so the big question on everybody's mind is, when is the junior mining market going to turn around? And I have a very well, I've heard a lot of opinions on this. I'm sure all of you have. Certainly discovery could help, and a rising commodity price could help. But I think it's going to be really simple. And this is one of my best friends, Andrew Pollard. He runs the mining recruitment group. This was a couple of years ago. Andrew Pollard went to the casino, blackjack, his favorite game, pulled out $3,000 from the casino, celebrated with a party sub at Subway. And as soon as he put this picture on Facebook, despite the fact that I had lost money every single time I've ever gone to the casino, the next day my friends and I were at the casino. So I think what's going to make the junior mining market move is a discovery and success, and I think that's happening. So that question that obviously people you need to ask is, when you're evaluating a sector amongst all of these zombies, who's actually doing work and who has a chance? Because the junior market is all about taking shots, and all of the companies in the mining space that you will hear from today, I think, have very active programs, and certainly the ones that we are writing about on ceo.ca are taking shots, and so that's something to pay attention to. I am writing two stories for the Financial Post PDAC issue on Tuesday, and the first is a book review about Dave Lowell's new book, Intrepid Explorer. This is Mr. Lowell. He is an 87-year-old prospector from Arizona who found 16 to 17 ore bodies. There's some dispute over the 17th, and they call him the world's best mine finder. And so I had a good opportunity to meet Dave a few years ago, and certainly read this book. And it's just come out 10 days ago, and I really think every CEO and every mining investor needs to read 75 years of mining and exploration excellence and history as told by Mr. Lowell. He has seen more projects and drill tested more targets than certainly any mining person that I know. And there are some real basic thoughts and notes in his book, I think, that apply to us as exploration investors. And so this is pretty basic stuff, and I don't want to dumb it down too much. But as Dave said, mines are found in the field and not in offices. So office space is something that kind of irks me a little bit. I see some junior miners haven't drilled a hole in 3 years, and their plan this year is to run a geophysical survey. And why are we paying their conference budget and their office space and their salaries if they're not doing any work? The other part about this mines are found in the field and not in offices point, I think, is really important, is that the young geologists and the successors to Mr. Lowell in this space, I think that there's a void of young exploration talent who are getting context, seeing lots of projects. Like, you need to experience different geological settings and see as many mines and prospects and targets in your career to be able to find stuff. And the geologists that I know have a very hard time putting down their iPhone, just like I do, and they are hanging out in coffee shops and not in the bush and the jungles. So I think for a dearth of discoveries, there's reasons for it. Obviously, if you don't drill holes, you're not going to find mines. So why own a junior that's not exploring? Basic exploration techniques. Dave likes to chase soil anomalies. He likes to see high-graded surface, whether it's copper or gold or something else. And he said he wasted a decade of his life chasing geophysical anomalies, those fancy red blobs. So basic stuff. As an exploration investor, you need to give permission to your CEO or your team to fail, because odds are they're going to fail. Lowell says 1 out of every 300 or 3 out of every 1,000 good-looking prospects become mines. And so if you're going to play in this space, you have to, you have to have expectation of failure. And also, in the case of Lowell, if your target doesn't turn out, you have to have plenty of plan Bs. So if you're looking and evaluating a junior company and they don't have a prospect beyond the one they've been touting for the last 2 or 3 years and haven't drilled, then what, right? So Lowell's tries to quickly identify a fatal flaw and move on, and he's 87 years old and he's still seeing and turning over dozens of projects a year. And so when you're being critical of the companies, you need to, I guess, determine if this isn't going to work. Do they have the stuff to come up with new targets and new ideas, or is this just another scam to mine shareholders instead of find mines? So the last point is not super important. Lowell said, discoveries bring out the worst in people. And I think in this business, you need to have a bit of sharp elbows, and everybody needs to think for themselves and understand that certainly it's a tough biz, and you have to be, you have to swim among the sharks here. So just recommend everybody have their guard up. The coolest part about Dave Lowell is in his 50s, he thought he was approaching his Swan Song project. He had made 8 discoveries, and he went on to do the best work for himself financially and also as an explorationist in his 60s, 70s, and 80s. He found an additional 8 ore bodies, found something like $200 billion of copper that's been extracted, made a fortune for himself. So I think baby boomers in the mining sector for the last 4 years have been thinking, oh, I think maybe we're done and maybe the sector's too screwed up. But I actually believe that baby boomers have some of their best work ahead of them, and that people like Robert Friedland, who's not presenting like he used to and his stock's at an all-time low. It wouldn't have mattered when I made this presentation. Since this company's gone public, it's always been at a low, keeps going lower. But I think guys like Robert Friedland, Frank Justra, and other promoters that you thought might be sailing to the sunset are going to return. I encourage all the investment bankers and investors in the space not to start thinking like this is over, because like Lowell, we can do our best work as old timers. And I'm saying that as a 29-year-old. So I'm a shameless name dropper. I interviewed Lukas Lundin 3 times in the last week. Lukas Lundin is the world's, as far as I'm concerned, the world's most successful natural resource developer. He had some good fortune on his side, in that his dad was a billionaire mine finder and oil tycoon. But Lukas is just as successful, if not more so, than his father. And he's beaten the drum this week. He's a lead sponsor at PDAC with his new story, Lundin Gold. And so I spent an hour with him in his office, and I had a couple phone calls with him in the last week. And just some thoughts from the story with Lukas that I will be publishing on Tuesday in the Financial Post. He's making investments like crazy, hundreds of millions of dollars in copper and oil and in other spaces. And he had this funny comment about institutional investors they're going to come in when they think the commodity price is going to rise, and not until then. He was totally fascinated by their interest in the charts. They're not going to buy it until they see it moving. And so he sort of said funny in his Swedish accent, "They love charts." And it was interesting. And anyway, he's got a big bet on the gold space, thinks gold's going higher because all the countries have been printing money, try to get their exports cheaper. So Lundin Gold obviously is his new play there. He thinks oil price is going to be $80 by the end of the year because of the high declines in these U.S. rigs. He says despite this mega bubble everybody talks about in the 2000s, not that much was built in the base metal space. So he thinks copper for a long-term or medium-term investment strong. He thinks zinc is going to have a monster year. That's a direct quote. After 10 years of misery, and he caveated that by saying following the monster year will probably be another 10 years of misery. He mentioned 2 junior companies. He knows that I'm a shareholder in both of them, but these are 2 juniors that he's watching. One is Lowell Copper, which he's a major shareholder of, Dave Lowell's Jr., which is run by an 87-year-old, and if anybody could find a mine, it's him. The only risk is Dave getting tired, and I don't know if I see that happening yet, but they have some very exciting work. And the other company is a presenter here. It's called North Arrow Minerals, which the Lundin family trusts are major shareholders of, and Lukas has been following it with keen intent over the last couple of years, and they have a bulk sample test in the Quillalujac project, and none of it, which is ongoing right now. On Friday, they published results of the first 46% of the bulk sample. They've found some really nice-looking big yellow stones. So Luke is very excited about that, but North Arrow is a junior company. You'll hear more about it later, but it has the share structure and it has the shareholders, and you know it could be a huge winner if they can continue to be lucky with drilling in Saskatchewan and this bulk sample. So with that said, it's just as vulnerable to the downside. So be careful. I'm long. This was something that I've realized, and it's that real economic discoveries are extremely rare, and diamond mines themselves, this is a metaphor, but diamond mines are made by a few big stones, and the same with exploration investment. So if you think one guy is going to tell you one stock and it's going to change your life, you're probably a patsy. And I think you have to have an approach of this is venture capital, and it should be a small part of your portfolio, and there's going to be one or two things that make up for a lot of disasters. So that's just the buyer beware stuff. My dad is a portfolio manager. He wouldn't touch a resource stock. He just hates them. And I don't know if he was trying to reverse encourage me to join the business somehow, but he said one thing I would recommend is just see as much as you can. See as many companies, put yourself in exposure. And so at ceo.ca, our website, we interview companies every day. I probably talk to 5 CEOs a day, and we write tons of stories, and we see lots of deal flow. So subscribe to newsletters like mine, Resource Opportunities, and Eric Coffin's, and Keith Schaefer's, and others. See all this information, but don't buy every stock. For God's sakes, don't. Some of them you should buy. So to conclude, I think I said discoveries are extremely rare, and I actually think I have made a discovery within my company, and it's a technology discovery. You guys may turn on the radio for entertainment. Maybe it was television or something else for you, but for me it's always been the internet and text. And so I was really fortunate to meet some web developers in Vancouver. I am a bit of a web guy myself, but I met some really exciting talent, and I finally recruited them to join me. Seems like all the good young web talent, they want to work for anything but a mining sector. But I talked them into it, and we're building a application for this sector, and I think actually for other sectors, but it's real-time discussion on Canadian juniors. And I don't know what the future of the newsletter business is, but I know that I'm completely addicted to this product called chat.ceo.ca. And so we're beating Stockwatch by 10 minutes on getting a news release into our service, and instantly you've got a broker and a geologist and a promoter and a hyper and a pumper and a short seller immediately forming context underneath what the press release was, and then you get your email from Stockwatch saying, hey, a news release has hit the wire. So this is real time, it's mobile, it's fast. There's an exceptional group of probably 500 core users. We've only launched this thing in the beginning of January. I think this is the new radio. I think this is super exciting to be a part of. It's text-based, constant, ongoing discussion of Canadian juniors. You can search any stock, see a chart, see all the comments. And it's mostly newsletter writers and mining journalists that hang out in the chat. And so if I can leave you with anything, it's just please go to chat.ceo.ca on your iPhone, on your iPad, on your desktop, and become a user, because I think that we all have something to contribute to the space, and I think that we are seeing the best deals discussed first by the best people in there. And if you want to be early on a discovery, I guarantee you it's happening there. I got a quote from my friend Russell, who I think is here, and he's the head of user experience from RBC Capital Markets. User experience is a title for people who design interfaces. And he said, this is an exciting little site with huge potential on Twitter yesterday, which really stoked my fire. And I'm really proud of this product. So please check out chat.ceo.ca. And obviously, in June of last year, I negotiated a deal with Lawrence Rolston, who runs Resource Opportunities since 1998, to do a 3-year partnership and takeover of his newsletter. And to be completely honest, it's very challenging because we're not selling a lot of mining newsletters in an environment like this. But we're trying to put out our best ideas to the Resource Opportunities subscriber base. And anybody who joins chat.ceo.ca today, which is free, I will send the latest 2 Resource Opportunities reports to you on companies that are not here and are very cool. So, to conclude, this is a goofy saying of people of my generation, FOMO, fear of missing out, and I think that's what's going to move the market again, is greed and money making and discovery, and I think that'll happen. There are some companies in this room, whether it's NextGen or Precipitate or North Arrow or any of the others, that I think could inspire, could create some capital gains and trickle down to other stories and get a bull market going again. And it's going to happen eventually. So chat.ceo.ca is our app. Resourceopportunities.com is our newsletter. CEO.ca is still the best site in junior mining, hands down. I'm not biased at all. And my best buddy and I, Scott Armstrong, have created a website called energyandgold.com, which is just another website. And we encourage you guys to check them out and engage with us and contribute and ask questions. And I hang out in the chat probably 8 hours a day, and my woman is very upset with me sometimes. But while she's watching cooking shows, I'm answering questions on chat.ceo.ca. Thank you very much.